Okay, good morning, everyone. Looking at the US stock market, the Dow has earlier formed the triple bottom formation along the 23,500 points level. Since then, we did see the Dow continues to trend higher for the next eight consecutive trading days. It hit some of the resistance along the 25,000 psychological level and formed some of the uncertainty candle, forming the shooting star candle along the 25,000 psychological level. And subsequently, we did see the reversal pattern was being formed on overnight as the Dow fell about 193 points or 0.8%. So moving forward, we're expecting some of the further pullback on the Dow Jones towards the 24,000 psychological level to see how it holds there. If you can see some of the support along the 24,000 or even back towards the 23,500 points level, then we could see rebound on the Dow Jones back towards the 25,000. Until we can see a breakout above the 25,000, only we can confirm that the Dow could be heading higher towards the 25,800 or even towards the 26,600 points level. In the meantime, the 24,000 and also the 23,500 will serve as the support levels on the Dow Jones Index. The Dow trend about 0.8% lower on overnight was mainly due to the strong economic data, whereby the retail sales data for April rose about 0.3% month on month, matching economists' expectation. Hence, this could increase the likelihood of the rising interest rate over the next coming months, which and this also has caused the US dollar to strengthen sharply, and subsequently the bonds will sell off while the treasury yields for the 10-year treasury yields has rose above the 3% level as well. Similarly, on the S&P 500, we did see the S&P 500 has recovered along the 2600 psychological level. Since then, the S&P 500 has hit some of the resistance along the 25, near the 2750. It formed a shooting star candle, and the reversal pattern was noted on overnight as the S&P 500 has pulled back about 0.7%. So moving forward, we're expecting further pullback on the S&P 500 given a sharp rally of about 140 points rally over the past 1.5 weeks. Any pullback for now will be a healthy pullback towards firstly the 2650. If the 2650 cannot hold, then the next support will be located towards the 2600 psychological level. But in the event that there's a recovery from this point onwards, gains firstly will be kept towards the 2750, and until we can see a breakout above the 2750, only we can confirm that the S&P 500 could be heading higher towards the 2800 or even towards the previous peak of 2870 points. Okay, some updates on the crude prices. The crude prices has earlier hit the resistance along the $66 barrel mark. Since then, we did see the crude prices has experienced a breakout above beyond that level, and subsequently, price continues to maintain its position along the EMA 20 level. So for now, following the recent breakout above the $70 barrel mark, we did see the crude prices has continues to maintain its stance above the 70 as well. So we could see some of the further consolidation on the crude prices over the near term, but should there be a recovery from or a rally from this point onwards, gains could be likely to be kept towards the 75 or even towards the 80. In the meantime, any pullback from now will see losses limited towards the $66 barrel level. All in all, crude prices is still forming the higher high and also the higher low formation, implying that the uptrend is still very much intact on the crude prices. Some updates on our local front. The FMKLCI has retreated from the all-time high of around the 1895 level on the 19th of April. Since then, the FMKLCI has staged a pullback. Following the unexpected win from the opposition, we did see the FMKLCI has seen some of the knee-jerk sell-off on intraday basis, just towards the 1800 psychological level, and subsequently the key index has rebounded very sharply, recovering all its intraday losses to form the bullish candle. However, on yesterday itself, Despite the FMKLCI hovered mostly in the positive territory supported by the local funds, the final hour selling pressure from the foreign investors has sent the FMKLCI lower, just marginally lower. So moving forward, we are expecting the FMKLCI to trend to consolidate or just trend drift marginally lower towards the 1840 level to see a close there. If the 1840 level gives way, then the next support will be located towards the 1800 psychological level. However, should the recovery pattern were to be formed along the 1840, a bullish engulfing candle or a hammer candle, then we could see the FMKLCI heading back towards the 1880 or even towards the 1895 level. But for now, given that the weakness in the Wall Street and also the weaker ringgit against the US dollar, we could be seeing some of the more profit-taking activities alongside with the global stock markets. On the FBAM small cap wise, we did see the lower liners has also formed the bullish candle on the first trading day after the general election G14. Investors cheered on the opposition win, and subsequently we did see the mild profit-taking activities was being formed on yesterday itself, as the FBAM small cap index has fallen about close to 100 points. So moving forward, we are expecting further pullback or further profit-taking activities on the advanced small caps over the near term, potentially forming the bullish flag formation or breakout towards the 15,180 points. But in the event that the FM small cap index pullback could not hold above the 14,250 points, then we could see further selling pressure towards the 13,000, back towards the previous low of 13,700 points. Some of the stocks that we can watch out for will be firstly is MyNews. MyNews has again rallied towards the recent all-time high of the 1 ringgit and 80 cents level. After hitting the intraday high of 1 ringgit and 80 cents, we did see MyNews has subsequently pullback towards the 1 ringgit and 26 cents. After hitting the 1 ringgit and 26 cents, we did see a recovery pattern was being formed. It recovered over the next couple of days. Subsequently, price traded on a sideways pattern over the 1 month trading period. And on yesterday itself, we did see MyNews has experienced the gap up formation, and subsequently price made a breakout above the 1 ringgit and 55 cents level, accompanied by some of the high volumes being traded. Following the breakout above the 1 ringgit and 55 cents, this is, we are expecting a mild pullback to occur over the coming days. This should there be a mild pullback, this would be an opportunity for us to accumulate on MyNews before the next upper rate to resume towards the 180 or even towards the 1 ringgit and 90 cents level. In the meantime, the immediate support will be located towards the 1 ringgit and 44 cents level on MyNews. On Surya Capital, price is still on a downtrend formation, so any recovery from now will be just taken as a technical rebound. Price has again pulled back towards the recent low of around the 1 ringgit and 58 cents level. After hitting the 1 ringgit and 58 cents, we did not see any follow-through selling pressure, and instead, price has been consolidating on a sideways pattern over the past 2 months trading period. And on yesterday itself, we did see that Surya Capital has experienced the breakout above the 1 ringgit and 70 cents level as price closed above the EMA 60 level as well. Early on, we did see the price has rejected the EMA 60 level on the end of December and also the end of February. But on yesterday, we did see price has closed above the EMA 60 level. So following the breakout above the 1 ringgit and 70 cents, we are expecting price to head higher towards the 1 ringgit and 85 cents or even towards the 1 ringgit and 94 cents level. Your stop loss point will be located towards the 1 ringgit and 58 cents level on Surya Capital. On indicators wise, things appears to be quite positive right now, as you can see that the MACD indicator has been slowly creeping higher. The MACD line has already crossed above the 0 level, whereas the RSI has also been floating around the 50 level, mostly above the 50 level over the past 1.5 months trading period. On GFM, our price has retreated from the recent peak of 69.5 cents level towards the recent low of around the 46 cents level. After hitting the 46 cents, we did see price has recovered. It rejected the EMA 120 level and subsequently pulled back and trend on a sideways manner. However, we are seeing some of the accumulation was taking place and also some of the build up in our volumes over the past couple of days as well. Following this build up in volumes, we did see price has also closed above the EMA 120 level as price experienced the symmetrical triangle formation breakout above the 53 cents level yesterday. Following the breakout above the 53 cents, we're expecting price to trend higher towards the 59.5 cents or even towards the 62 and a half cents level with your stop loss point located below the 49 cents on GFM. With the breakout above this symmetrical triangle or the trendline formation on yesterday, we did also seeing the MACD indicator has already issued a buy signal, just that the MACD line is still below the zero level, whereas the RSI is retesting the 50 level as well. For Comfort Glove, we did see price has experienced a heavy sell-off towards the 69 cents level, following the news on its goods were uh, confiscated by the US FDA. So for moving forward, after that, we did see the Comfort has came out and clear on its the news, and subsequently price has experienced the technical rebound over the next 2 days. It rejected the EMA 9 level and subsequently price pullback. During the recent pullback phase, we did not see much of the heavy selling pressure, and instead we did see the bullish engulfing candle was being formed. Over the next 3 days, we did see the white candles were being formed as well. So this could be the short-term breakout towards the 92 cents, the pullback, and the potential continuation pattern for price firstly to retest the 92 cents, and upon the breakout of 92 cents, further upside will be seen for Comfort towards the 98.5 cents level. Your stop loss point will be located towards the recent breakout point of the 80 cents level on Comfort. Last two company for today firstly is GCB. GCB is still on a downtrend formation following the retracement from the 2 ringgit and 20 cents level, all-time recent high. After hitting the 2 ringgit and 20 cents, we did see price has pulled back sharply towards the 1 ringgit and 32 cents level. And after touching the 1 ringgit and 32 cents, we did see price has staged a technical rebound. And however, the rebound did not last long, and subsequently price pulled back and traded on a sideways manner. And the good thing is that with this, you are seeing some of the accumulation was taking place over the past 1 month trading period, that we are going to monitor for the breakout above the 1 ringgit and 61 cents. Until we can see a breakout and a closing above the 1 ringgit and 61 cents, only we can confirm that Guangzhou could be heading up for the recovery towards firstly the intraday target price is at the 1 ringgit and 69 cents. Should that be a breakout above the 161, the next target price will be located towards the 1 ringgit and 83 cents level. Should price breach above the 1 ringgit and 61 cents, then your immediate support will be located towards the 1 ringgit and 38 cents level for Guangzhou. Last company for today will be Chrono. Chrono earlier we did mention for the breakout pullback and continuation pattern. It formed the bullish engulfing candle. However, the price did not retest the 72 cents, and instead price has pulled back just towards the EMA 20 level, and subsequently we did see price has recovered over the past 3 trading days as price once again retested the 72 cents level. So once again, we'll be continue to monitor for the breakout above the 72 cents level. Should price breach above the 72 cents, we could be seeing Chrono to trend towards the 83 cents or even towards the 89.5 cents level, with your stop loss point located below the 60 cents level on Chrono. If you have any questions, you can put in the chat box. I'll reply shortly. And also, over the next coming like 1 to 2 weeks, a lot of companies will be reporting their quarterly results. So do watch out for those announcements, as it could affect the company's share price. Should the results came in negatively, then it's advisable to advise clients to cut loss on those counters and move to those profitable companies. I think there's a question here from JB to ask whether still can we still short Josh Ken on MYG. I think the Bursa new rules saying that there's a maximum of 3 days. If the company limit down for 3 days, then it will be suspended. Then should price limit down for today, then I think price was likely to be suspended. It's better not to touch on these two counters for now. Because if price it will be suspended, then we are not sure when will the trading to resume, and after the resumption, the price will likely to see further selling pressure. For hibiscus, price has been trading very strongly. Following the recent recovery above the 74 cents, we did see price as experienced a breakout above the 82.5 cents level. With the breakout above the 82.5 cents, price continues to trend higher. It managed to hit the first resistance along the 94 cents and a half cents level, and on yesterday itself, we did see price has closed above the 94.5 cents. With price maintaining its position above the should price maintain its position above the 94.5 cents, we are seeing further upside on hibiscus towards the 1 ringgit and 6 cents level, or even towards the previous peak of 1 ringgit and 17 cents. But for now, any pullback will be a healthy pullback on hibiscus towards the 89 cents level before the next upward to resume towards the 1 ringgit and 6 cents, or even towards the 117. Myself, first alongside with MYG, and also Josh Ken has seen the 2 day limit down towards the uh, 50.5 cents level. On the intraday basis, we did see Excel Force has seen some of the bargain hunting activities. However, the selling pressure has continues to kick in on the later part of the trading session, implying that the bears are still dominating on this counter. So we are expecting, should EFOS breach below the 50.5 cents, then it's best to cut loss immediately, while any gains will be just capped towards the 63 cents level for now. So any recovery towards the 63 cents will be taken as an opportunity to sell into strength strategy. If there's no further question, there will end the morning briefing for today. Thank you.